So have you ever wondered how to measure the value of tokens that back an asset, or to determine what to look out for, the key metrics to look out for when choosing a tokenized project? Yes, these are the things we are set to do with this new series of Token Economics, a woman's guide to smart investment in tokenized assets. So you're welcome to today's session. This is BitQueens. I'm Christy Emmanuel, and it's such a delight to have you. Welcome, Carol. It's good to see you in this fresh edition. Of course, Ruka, is good to have you. Naomi, is good to have you. Welcome, Soma. And it's such a beautiful Sunday here. We are going to be diving deep, like I said, into token economics. So when getting into a project or a tokenized asset, or looking to buy a tokenized asset, have you wondered or stopped to ask what to look out for when picking such project? How do you know that that token is going to be valuable? What are those metrics you need to watch out for so that you can make informed decision? So all these are more we are going to be looking out for in the course of our presentation. And without wasting any more time, I will go ahead and share my screen so that we're guided for today's conversation. So today is going to be more of building foundation for our conversation, because this is a series that's going to last us for a while. So we need to build the foundation for us to understand a few things before we dive even deeper to key metrics that you need to understand in making informed decision in your journey. So it's Token Economics 101. Now, I want you to understand that while you're doing your research or reading up, you might come across this word, token economics. Sometimes you might hear it as tokenomics. Now, these two are often interchanged in terms of usage and meaning. While they mean the same thing generally, they have a bit, difference in meaning. So token economics refer to how a particular token we do in the market. That's in relation to how the market perceives it, the demand, the usage, the value it's providing, how people generally are interacting with that token. Now, when you hear tokenomics, it refers to the actual design, creation of tokens and allocation to determine what the project is worth, how many tokens it ought to have, what the value of each token will be, how it's released into the market. All these refer to tokenomics. That is for the entire design of that particular token and the asset that it is backing. So our focus is more on token economics, even though these terms can be used interchangeably. You, who is a woman who is looking to participate in a tokenization project, what are the things to look out for to measure the value of a token backing an asset, or the key metrics that help you decide or know if that token has the potential to do well in the markets? Without wasting any more time, of course, having laid that foundation, let's get right into our conversation. I'm Christy Emmanuel. I'm a blockchain educator for women and founder of BitQueens. So if you're listening to us for the first time, you're welcome to BitQueens. BitQueens is a community that is supporting women to learn about blockchain technology, about cryptocurrencies, and how they can empower themselves with this new and emerging technologies. Of course, we have designed our platform to be one that offers you easy access to our resources, to participate in our training sessions, of course, in a way that is easy and enjoyable, so that you build the confidence and passion that allows you participate and benefit from the endless opportunities that are in this space. So that being said, let's get right into it. So what's going to be our focus for today's conversation? First, we're going to look at what token economics mean, and then we are going to look at what a token means. So like I said, this forms the background of all the other conversations that will follow in our subsequent presentations. Then we'll look at the different types of tokens. We'll look at what informs token supply and demand, and then we interact. So take this as foundation presentation on going further into how to value a token that is backing an asset. So let's get right into it. So the first thing is, what is token economics? Token economics basically means the study of how tokens are created. I told you that token economics and tokenomics can be used interchangeably, but basically, token economics is helping you understand the value that a particular token brings to the marketplace. So that token is backing an asset, and you want to understand the value that it brings, the use cases that that token have. So you want to really understand the economics. It's just like, trying to understand a business and the value proposition they're offering so that you decide whether you want to be part of that business or not, right? So that's exactly what token economics is. You just want to understand the value that that token is bringing or that asset is bringing, the potential it has to do well, the numbers behind the tokens or the idea behind the project, so that you're able to make informed decision in choosing a tokenized asset to participate in. So that's what token economics is really about. So you get to understand, like I've said, the real value. So it's not just you going into the market and picking any token of your choice. You really want to understand the value proposition for that token, the asset itself. You want to understand it, the supply and demand, because all these things help to show whether a project is viable or active or not. Market sentiments and demand. Are people enthusiastic about that project? Is it a project that is providing a unique solution, or is just like following the crowd when it comes to executing these different blockchain projects? So you really want to understand supply and demand plays a major role, because it determines whether the project is going to increase in value in terms of capital appreciation, or it's going to decrease, right? So all these dynamics help you decide what value that token representing that asset is carrying, and also how people who are participating in the ownership of that asset are incentivized for their participation and all that. So it gives you an overview of what happens in a particular project from an investor's perspective, from a user's perspective. That's why this is really very important as you take your journey into the tokenized assets very seriously. You really need to understand what this is. So now I want to know, what exactly is a token? So we hear, oh, tokens, tokenized assets. By the way, we started this journey on tokenization of real-world assets. So if this is your first time bumping on this video or this training session, please do yourself some good. Go back to our YouTube channel. We've done a ton of presentations and training sessions on tokenization of real-world assets. And tokenization briefly means converting the ownership or ownership rights of an asset into tokens on a blockchain. So that's basically what it means. So when you hear a token is representing a value. It's representing ownership or access right to any asset, real world asset, whether that asset is tangible or intangible. And these tokens can be traded, they can be exchanged, you can manage it all within a specific blockchain ecosystem. So these tokens are created on a blockchain. Because they are created on a blockchain, they are secure, they are decentralized, they're transparent. And so you can actually see the number of tokens created. You can have access to the information about that project, the value proposition, the supply and demand, total supply, circulating supply, all that type of information that helps you make informed decision. And these tokens can be used for different purposes, depending on what they were created for and why they were created. Could be for payment, could be for access to certain services. In this case, it will be a utility token. In case of representation of assets, in this case, it will be more of tokenization projects, could be representation of a digital art. In this case, it will be an NFT. Voting, in this case, it will be a governance token. So these different tokens have different functions, and understanding them allows you know what you are going for. Right, so we're going to be explaining this in the further slides. So, but this is what a token is. Represents a value of an asset, ownership of an asset, access right to an asset which can be traded, can be exchanged, you can sell, you can buy, you can manage, you can transfer within a specific blockchain ecosystem. So let's look at tokens versus cryptocurrencies. This gets used interchangeably, right? While they basically mean similar things because they're referring to digital assets, there are differences between a token and a cryptocurrency. So today we want to set the record straight so you understand the difference between tokens and cryptocurrencies. Now, cryptocurrencies are coins that have their own blockchains. Cryptocurrencies are digital assets or coins that have their own blockchains. That is, they are native to a particular blockchain. So when that blockchain is designed, the native coin that runs on that blockchain is also created. So they are called cryptocurrencies. Tokens are digital assets that do not have their own blockchains. And so they are launched on top of other blockchains. So that's why they are called tokens. They do not have their own blockchains, and so they are not native to any blockchain. It's just like having a piece of land and then you build a house, and then there's so much space and you give more people the opportunity to come and build their own houses, right? So these other existing blockchains offer a solution for these projects that do not have their blockchains launch their projects on their own blockchains. So this is the major difference between cryptocurrencies and tokens. So when next you hear tokens and cryptocurrencies, just know the difference. Cryptocurrencies have their blockchains, tokens do not have their blockchains. However, they launch on already existing blockchains. For cryptocurrencies, they are designed as a means of exchange for store of value like Bitcoin, for transferring of value and all that. So you can actually send someone Litecoin, you can send someone Ethereum, you can send someone Bitcoin. You know, for tokens, like we've said, they represent value, they represent ownership of an asset or part ownership or access to certain services within a particular blockchain ecosystem. So that's the major difference. And you can see examples, ERC20 tokens like DAI, Link, NFTs are examples of tokens that can exist on already existing blockchains. So that's the basic difference between the two. So let's look at the types of tokens and of course, what they do. The first one is utility tokens. Utility tokens allow you allow you access to certain services within a particular blockchain project. For instance, Filecoin is one, Ether is one. For Ether, it allows you pay gas fee. If you've used Ethereum network before to do a transaction, you'll agree with me that you're asked to pay gas fees. So what do you pay the gas fees in or with? It's Ether, right? So in this case, Ether is acting as a utility token because it allows you access a service. And in this case, the service is to allow you send value from one person to another. What about Filecoin? Filecoin allows you buy storage to store data within the network. BAT is basic attention token. So this allows you own your content in a way that is decentralized. So all these are tokens that allow you access to different services within a particular blockchain project. Then we have security tokens. So security tokens are tokens that back assets, real world assets. The assets could be tangible or intangible. So that's why they are called security tokens, because it directly involves real assets, right? People putting down their funds or representing people's participation, like a block token that represents your part ownership in an aviation tokenized asset, right? An asset that is tokenized in the aviation industry. Then we'll have blockchain capital. This is another one. It gives you kind of a limited partnership access into a venture capital fund. And T0 is another one. It gives you part ownership into the T0 groups. And now we want to talk about non-fungible tokens. So non-fungible tokens are also referred to as NFTs. Now, why are they called non-fungible tokens? They're called non-fungible tokens because they represent a piece of value that cannot be divisible. I mean, like a digital art, a virtual land, something scarce, something rare. There's just very limited amount of it, maybe just one or just 100 of it, and you can't divide its ownership between multiple people. Just like if you have a real estate, for instance, 100 persons or 1,000 persons or 1,000,000 persons can own that one piece of real estate. So this digital art cannot be divided amongst 100 people. Someone just has to own it. That's why it's called non-fungible tokens. And we have examples of that, like CryptoPunks. These are virtual pets. Mana is for decentralized ecosystem. Of course, it allows you own virtual land in the metaverse. And of course, we have CryptoKitties, which is a virtual pet cards, actually. So these are just examples of different tokens and what they represent. Then we have payment tokens. So these payment tokens allow you make payments like Bitcoin Cash, Litecoin, Dash. Why they are payment tokens? Why people actually use them? Because they're very fast. The transaction fees are next to nothing. And of course, these examples are not exhaustive. Then stable coins, yes. In case you're wondering, are stable coins also tokens? Yes, they're tokens because generally stable coins do not have their own blockchains. Yeah, you've heard of USDT, USDC, DAI, and the rest. These are tokens that are launched on existing blockchains. If you've ever tried to send USDT to someone, or someone tried to send to you and they're requesting your USDT wallet address, you are asked to be sure of the network. There's USDT on the Ethereum network, on Tron network, Polygon, on Solana, many blockchains like that. So in this case, this stable coin has different versions on different networks. So that's why when you want to send, like I've said, you need to confirm the network so that you're not sending USDT ERC20 to USDT TRC20. Otherwise, you lose it because it's not the same network. And at this point in time, most blockchains have not become interoperable. Interoperable means, communicating with each other seamlessly and effectively. So that's why you still have to make sure that you're sending to the right network. So stable coins, yeah, are types of tokens. And you can see USDT, USDC, DAI, all these are examples. We also have governance tokens. So what governance tokens do, give rights to holders to be part of certain key decision-making process. So those who hold this type of tokens can be part of decisions that will carry a particular blockchain project forward. So they have the right to vote, the right to participate in certain governance activities. That's why they're called governance tokens. So it's important to mention now that this list is not exhaustive. We put this together to give us an overview of the different types of tokens. So when you're doing your own research, you may come across more tokens, but this will help us streamline our conversation and help us have a better understanding of where we are going with the topic we are discussing, which is token economics, a woman's guide to smart investing in tokenized assets. So that's for the types of tokens, and I hope you're getting value for your time. Now let's talk about token demand and supply before we wrap up the conversation. So you want to understand what actually drives the supply and demand of tokens. If the supply and demand mechanism is well taken care of, it just tells you right away whether this project has the potential to do well or not. For instance, if you have supply that overwhelms the demand, there's a likelihood that the project in terms of value will drop. Yes, because you have more supply than people are demanding the tokens. So it means people are not seeing value in that project, or probably the value proposition is not solid, and so people are not seeing the need to be part of the ecosystem of that project. So demand and supply plays a major role in measuring the potential of a token that is backing an asset. If you have a supply and the demand is more than the supply, that is, you have more investors or users demanding to lay their hands on this token, but the supply cannot even meet the demand. What do you think will happen? It will potentially go up in terms of the value of the token and the return on investment the investors will get. These dynamics has to be understood, and different blockchain projects use different means. There's what we call halving, right? We've talked about halving here in one of our conversations. And then there's what we also call burning mechanism. So these are different mechanisms that these projects can use. So in terms of halving, it means dividing the number of tokens that are released into the ecosystem or into the hands of users or investors or in the marketplace at a regular interval. We talked about Bitcoin halving, and that happens every 4 years. So depending on the project, some can do theirs every year, for instance. Some will have a kind of mechanism that reduces it in terms of the number that is being produced daily. In this case, it will mean having a minting factor, a factor by which the number of tokens being generated reduce over a period of time. So there are different mechanisms that projects can use to control supply and, of course, build on the value they are providing so that the demand hits the roof. So this will help you decide whether a project is going to potentially do well in the future or not. So what really drives supply? How do you know the supply of a coin? First of all, the total supply. So you have to know the total supply for the blockchain project or the company behind it. Most times announce, okay, this is the total supply for this project, right? And the total supply could be fixed. It could vary, fixed supply. For instance, in the case of Bitcoin, we all know that there can never be more than 21 million Bitcoins, right? So in this case, the supply is fixed. For some, it's inflationary, meaning that with time, the supply will be increasing. So they start releasing it gradually, but it will be increasing. It will be increasing. Some is deflationary, meaning they tell you everything that it will be, or the total supply that can ever be, or the total number of coins that can ever be. But with time, it will be decreasing. For instance, with the mechanism called burning. So burning can happen maybe every 3 months, every 6 months. Burning basically means when a blockchain protocol regularly takes a quantity of their tokens or coins and puts it in a wallet that actually renders those tokens invalid, meaning that they can never be used again. So it's one way to reduce the supply. Binance Smart Chain, I think they do this for their own coin, right? From time to time, I think every 3 months they do this. So that burning means a portion of the tokens is put into a wallet. Once it's put in that wallet, it can never be used again. So that way it reduces the supply, and then demand can keep building. That way also the value that is attached to that digital asset or token keeps rising. So you have to understand the mechanism behind control of supply so that it helps you make sense if this token has the potential to appreciate in value with time. Then you also have to check the circulating supply. So circulating supply is different from total supply. Total supply is all the tokens that can ever exist. Circulating supply is the quantity already in the markets, that are already being traded, being sold and bought or managed or whatever, or transferred, Now, circulating supply can be the same as total supply if all the tokens have been released. Let me give an example. If you have 1 billion tokens for a particular project and it's only 300 million has been released, it means that the circulating supply is 300 million. Total supply is 1 billion. But at the time, they've only released 300 million. So when they eventually release everything, circulating supply and total supply now becomes the same. Then you also have to consider the token allocation. Of course, when these projects are launched, some percentage of the tokens are reserved. They are not pushed into the market. Some of them are used to do initial coin offering, some for the founders and the development team, some for managing the project, some are reserved for staking programs, some are reserved for airdrops. Airdrops are just tokens that you get for performing certain activities to promote a particular project. So these days of meme coins, meme tokens, and the bull run generally, you can hear people say airdrops this, airdrop that. Yeah, they are basically for marketing purposes. So projects that want to let people know about what they're doing or the solution they're providing will set out a number of tokens that they give out almost for free to users, but they have to perform certain tasks, like going to their X page, that's Twitter, or following them on Telegram, tweeting about their projects. Or X is one social media platform where you see all these projects very, very active. So they might require you to go there and retweet their tweets, tell it to a number of people, like their social media pages and all that, follow them on Telegram and the rest. So you just have to perform 1 or 2 tasks and they airdrop those tokens to you. With the belief that when they launch, or when they get listed, as it were, on an exchange, it's going to have some value. So these are different things that inform the supply of a token. The more limited in total supply a project is, the more likely it's going to have huge value and impact. Just look at Bitcoin, just 21 million. But we still have coins that are up to 1 billion token in number. We have 3 billion, we have 5 billion. So it depends. Low cap projects tend to do better. That's if they are actually providing real value. So it's not really just about low cap, because there are some tokens there that are low cap, but if you really trace it, they're not really providing any specific value, right? So you just have to balance your analysis when it comes to whether you're going for low cap or going for high cap, or you just want something in between. You just have to balance your analysis. Now let's look at the demand. What drives demand? Use cases. When people see that this is a project that has practical use cases, demand will skyrocket. User adoption. I mean, how many people are already using it? Is it providing value? Then definitely market demands, because there are some people that will find about your project, not because they knew about the project, but when they hear other people talking about it, and they just go to research, oh, people are talking about this project. Let's go and know what is happening. So market demand, the use cases, that is the application, that's where the value is, then that will drive. Then user adoption, how many people are already experiencing the value that this project is bringing. So all these will inform the demand and supply curve for any tokenized asset. And once you're able to figure this out, honestly, it does help you in making informed decision. So on this note, we will wrap it up here for today. In our subsequent session, we're going to look at token valuation. What actually makes a token valuable? We are also going to look at the key metrics for evaluating tokens that are backing tokenized assets. So these are more some of the things we're going to be discussing. Like I said, this is a new series, still within tokenization of real-world assets, but we needed to understand this basic part of making informed decision when taking advantage of any tokenized asset. The topic is token economics, a woman's guide to smart investing in tokenized assets. So thank you, ladies, for being here up until now. And if you've not already joined us, it's time for you to be part of this community. If you're enjoying the conversation and you are learning, or you know other women who are supposed to be here learning with us, please feel free to share with them. And if you're watching us live or watching the replay of this, you can just scan this QR code. It sends you directly to our onboarding page, and from there, you can have all the information that you need to be part of our community. Here at BitQueens, we are helping you make sense of what's happening in the blockchain space, the opportunities that are here, and how you can leverage that to empower yourselves. If you are not already connected with us on social media, this is the time you want to do so. Let's continue the conversation there. And of course, on our social media, you'll be able to get more resources. We're able to communicate more. If you have any concerns, any questions, you can also share with us. We'll be there to respond to your questions and your suggestions. So you can make a screenshot of this page as well. If you want to write us on anything specific, maybe you want to collaborate with us, you want to sponsor an event, you want to be part of what you're doing, you can also write us on the mail on your screen, info.bitcoins@gmail.com. I will be there to swiftly respond to your inquiries. So it's time now to get your feedback, questions, contributions, suggestions, experiences. It's time to share. It's over to you, ladies. Maybe I just stop sharing my screen. Oh, thank you so much for all your feedback. I can see that in the chats. Yes, thank you, Mrs. Oge, Okai. Oh, yes, it's actually very terrible, but I'm happy you are still hanging on. Virginia, thank you for your feedback. Luca, thank you for your feedback. So let's interact. I'm just going to stop sharing my screen now, and I'll go to the chats. Please feel free to unmute yourself. I think we can all unmute ourselves. Okay, you all can unmute yourselves now. If you want to speak, you want to share an experience, this is also the time to do so. Or anything, it doesn't have to be what we discussed today, right? So it can be any question from past conversations. That's why I love these sessions we hold. It offers us the opportunity to also revisit our old sessions. So it doesn't have to be only on what we've learned today. Okay, Carol.
Yes, I can. Yay.
Oh.
Thank you.
Yes.
Yeah, I have got experience of using stable coins, mainly USDT.
Okay.
And I have been involved in one of the projects burning to reduce supply. But it was, oh, do I really want to lose that amount? You know, in the hope that by reducing the demand, as you say, reducing the supply rather, it will bring up the value of yeah, the token, the utility coin. So yes, this has been very, very useful. Some of them I hadn't heard of before. I'm always learning something new on these sessions. So I thank you, Christy. Always something new. Yeah.
Thank you so much, Carol. Thank you. I'm happy you're getting value for your time here. And yeah, these
Absolutely.
different tokens have different, mechanisms, as it were. So it's one thing to actually look out for when participating or looking to participate in any project. So you understand how the demand and supply for that project works, and that will help you make an informed decision. There are different mechanisms. Maybe in our subsequent sessions, we'll also look at them. I think it's important. So we'll include it in some of the things we're going to be looking at: burning, halving, all types of mechanisms, so you understand. Mostly when you research these projects, you should be able to find information about the type of mechanism that the project is using. That way, you're able to make informed decision. But yeah, all these
Thank
things.
you.
Yes, thank you, Carol. Thank you so much for being here. Yes, thank you for your feedback. Okay, let me go through the comments. Okai says, can you explain utility tokens a bit further? I don't really understand. Okay, so utility tokens are tokens that allow you access certain service within a blockchain ecosystem for a particular project, right? Take, for instance, Ether. I mentioned it earlier. So these tokens, you earn them, but they still allow you access. They give you access to certain service, right? For instance, if you want to make a transfer or send money across on the Ethereum network, you're asked to pay gas fees. If you've done that before, if anyone here has ever attempted to send some Ether on the Ethereum network, or even if it's not the Ethereum network, let's say you are using a project that is on the Ethereum blockchain, that launched on the Ethereum blockchain, you are required to pay the charges or the blockchain fees or gas fees using Ether, right? So in this case, Ether becomes a utility token because it gives you access to a certain service. And in this example, the service is you are able to send crypto or coin from one person to another or token to another. So that's what they do. Utility, they have use within that ecosystem. Sometimes these tokens are not tokens that you find trading on the exchanges, right? They just find their use within the ecosystem. So that's why they're called utility tokens. Elizabeth, let me know if this answers your question. That's or Kaya. Angela says, thank you for another insightful sharing on tokenization, Coach Christy. Last week, I raised an issue on AI involvement in blockchain technology. Can you share a bit on this? Yes. Okay, thank you, Angela, for joining our session. And yes, I remember you made mention of that. We're hoping to have a dedicated session to that. But since you asked, I'll just share a little insight about what I know. So emerging technologies like blockchain and AI can find collective use case, right? So blockchains, of course, we know due to its decentralized nature, due to its transparent nature, due to its secured nature, can help in terms of health, in terms of governance, in terms of education, in terms of aviation. Different areas of life can be made better using blockchain technology. Basically, anywhere that requires for people to trust the system without actually relying on any third party is where, you see the value that blockchain technology brings. Then for AI is helping to automate systems, to make systems better, as it were, to enhance human intelligence. So where I see AI and blockchain working together is in trading. Let's give that example. So let's say you are a trader. These days we have AI tools that help you trade cryptocurrencies, meaning that you don't have to be a master at trading cryptocurrencies. These AI tools have been trained with histories of different coins and tokens and analysis of trading and all the bull runs going up and coming down, all the narratives about cryptocurrencies and all. So when you train a machine like an AI in this regard, it allows the trader to make more informed decisions. Now, the AI itself does the trading, gives you strategies, tells you what coins to buy and what coins not to buy, helps you see potential anomalies that can come in the future within that network or within that particular project that you're trading, and tells you when to enter the market, tells you when to exit. In fact, does the trading and returns your profit for you, and so you can see it in your wallet. So there's a whole lot that can happen in that aspect. Another place I see blockchain and AI working together is in terms of helping blockchain developers and smart contract writers do better in their codes. One of the things that offer bad actors the opportunity to manipulate any project is in code. So if there's a mistake in any code, that's where you hear what we call better version of any codes. It's just the first part that's been developed and waiting to be released. So what they do, first of all, is to test it with a limited community where they can test it and see if it's working well or not. So AI can potentially identify those areas where there are loopholes in those codes. Because if there are loopholes in the codes, bad actors can exploit it and manipulate a project, hijack it, write a malicious smart contract that can potentially make users to lose their money. I still remember sharing an experience here. I know a friend, we're together in business and we do this crypto thing together. So there was this time we were part of this project and there was this wallet we were asked to download. It's in that wallet that we receive our payments. So this wallet, once you log on, sometimes you will see ads that new tokens have been added to the wallet. So you can go to the list where you see those new tokens and you add them. So he didn't know that one of those tokens were malicious. It was a smart contract that was coded in a way that unleashes code to actually take your money if you click it. So the instruction to that code is, if anyone adds it or clicks it, it unleashes this instruction to take whatever funds you have in your wallet. So being the type of person that he is, he likes to explore. So when he saw it, he was, he added it, he was trying to interact with it and all that. At the time, there were no funds in his wallet. As soon as he received his next payment, everything was gone. That's one of the drawbacks or one of the concerns that sometimes we have with all this development within blockchain, because these are human beings as well, and they are not infallible. So sometimes when these things happen, there are loopholes, bad actors can take advantage. So with the use of AI, an artificial intelligence tool that is well-trained can detect such loopholes and help developers make adjustments or corrections in good time so that users don't fall prey. So there's a lot. People are using AI also in terms of marketing. So AI can also help blockchain companies to do good marketing to get to their own target audience and spread the word about their projects effectively. So there's a lot we can do, but like I said, we will prepare a dedicated training session to this so that we all benefit and see where we can position ourselves. Yes, I will encourage everyone to pay attention to what's happening in the AI space. People are saying AI is going to take jobs. AI is not about to take jobs. Those who understand AI are the ones about to take your jobs. So you have to be at the forefront of what's happening in this emerging technology and prepare yourself for the world ahead. AI is not for the future. AI is for now. And its time starts now for everyone. Thank you, Angela, for asking that question. I hope. Won't prior investments make Won't prior investment made on it be at risk, which might result to loss of funds? Yes, that's why the project owners will have to do a thorough check. You know, one thing about smart contract is once you let it out, you can't call it back, right? That's why there's a lot of testing and testing and testing. And there are third-party platforms that allow you verify your smart contracts. You don't just release a smart contract and leave it like that. For instance, a smart contract will say, if a person buys $100 worth of tokenized asset, give them certain number of tokens or allow them access to a software that means certain value of tokens, maybe every day or every other day or every week or however they design it, right? That's a smart contract and you can't call it back. That's why before they release it, they make sure that it's been vetted. There are companies that go through it and make sure that the smart contract is well done so that it doesn't cause any form of loss for investors. These things are not just left to chance. They are not done shabbily. That's why putting a lot of time and effort to be able to develop these projects. They are no easy task. So to answer your question, Elizabeth, they do a lot of thorough check. There's third parties that verify the code, make sure everything is all right before they are released. So I hope that answers for you, Elizabeth. Thank you for your questions. These are very interesting and very insightful questions that you asked. Thank you, Angela, for your feedback. Any more questions before we wrap it up? Thank you, Larry, for being here today. Okai, it's good to have you. Virginia, Ruka, Mrs. Oge, Obiocha, Naomi, it's good to have everyone. Yes, thank you for your feedback, Elizabeth. Madam Carol, it's good to have you. So if there are no more questions, I'd like to thank everyone who came here today. Remember, we can continue this conversation in our community. So if you have any questions afterwards, please feel free to leave them in the chats in our community. We will respond to them. And when we log off, I want you to go to our community and share what you learned. This will spark curiosity and, of course, help other women see the need to be here. What we're having here, some of us will not know until we begin to apply this in our blockchain journey and see the value that we are giving you. Some of us have to pay to be able to get all this information and learn of these things that we're sharing with you today. So we hope you are making the best out of it as much as we're happy to bring all this to you. Like I said, next week we'll continue our conversation on this topic, which is token economics, a woman's guide to smart investing in tokenized assets. That will be part 2. And there we'll look at token valuation, key metrics to look out for, and many more other things that we're going to be sharing. So you have to pay attention because it's for your own best interest as you're making investment decision, not only even in tokenized assets, but in cryptocurrencies generally, you'll be able to decide what's best for you. And again, it was my pleasure to bring this on behalf of the BitQueens team. We're back again next Sunday, 8 p.m. West African time, 7 p.m. GMT, and you can double check that with your own time zone